Good afternoon. You're watching Your Stocks live from the CNBC-TV18 Motilal Oswal studios. I am Hormas Patakia, and joining us today on the show are independent market expert Shahina Mukadam and Chandan Taparia of Motilal Oswal will be joining us shortly, or he's joining us on the show as well. Shahina and Chandan, good afternoon to both of you. Thank you for joining in as well. Just before we get to our viewer queries, numbers from Latent View flashing on your screen. A 35% growth in revenue for the quarter to 232 crores, a 36% jump in EBITDA as well, and the stock too has surged to the highest point of the day, 4.5% higher on Latent View after the results announcement. By the way, the markets too have cooled off from the highs. At one point the Nifty was up to around 24,500 levels, but we've cooled off from those levels, marginally briefly dipped into the red, but have recovered some ground from the lows as well as we go into the weekend. But starting off with our viewer queries, then Nikhila Das is writing to us from Coimbatore, and she has 15 shares of the Bombay Stock Exchange at 4670. Now he wants to know the long-term view on the stock and whether more can be bought at current levels. Well, Shahina, what about BSE? There has been a lot of talk about the derivative market share, the slowdown in the market as well, the upcoming NSE IPO. What's your call on BSE?
I don't really want to comment on the stock because not only do I hold it, but I also have done some few trades in the last couple of weeks. So I'll avoid, but I just want to point out that they have a board meeting on the 6th where the 2:1 bonus, a dividend, all those issues will come up for consideration. So I'll just pass the question to the technical analyst.
What about you, Chandan? What are the charts indicating here for BSE?
Yeah, so I take this counter very closely. In fact, we are recommending from last couple of weeks and months, one of the strongest counter in the market, and the way the demat accounts are rising in Indian market, and BSE also contributes around 17 to 18% derivatives turnover of the Indian market. Earlier, there was concern about shift in the expiry of two exchanges, but now it seems that both the exchanges will continue with their existing expiry. So I believe the overall setup is positive and decline could be bought. If you look at the price behavior of last 2 months, we have seen a rally from 3,700 to 6,800 marks. However, some consolidation is clearly visible, but I believe one can hold the long position or in fact can accumulate if any small decline happens. As of now, 5950 to 6,000 is major support for a positional target towards 7,000 to 7,200. And same time, I believe that till NSE IPO comes, the price momentum and trigger and focus will be there on the BSE. So one can continue to hold or can use any small decline as a buying opportunity in the counter.
Use any declines as a buying opportunity in BSE. So 63.59 is where the stock is, and handsome returns over the last 12 months as well. And Ritesh Kumar is now writing to us from Noida. He has 50 shares of Power Grid at 245. He's a long-term investor, wants to know whether he should hold or exit at current levels. Now, Shahina, there are a lot of options that one has within this power PSU space, right? Be it Power Grid, be it NTPC or the power financiers as well. Is Power Grid an attractive bet at current valuations, or do you think there are other more lucrative opportunities within this space?
After the correction that we had seen during the year, at current levels, valuations do look attractive, especially given the fact that they are talking of higher capex spends during FY26. They are talking of now something close to 23,000 capex, which actually adds to their bottom line because it's on a percentage return basis. And also, they have recently had their solar power and plant in Ujjain, 85-watt commence operations. So these are positives which are likely to see the stock remain buoyant. At the same time, I would say that you can keep a stop loss maybe close to 280. But of course, Chandan would be in a better position to give those levels.
Chandan, 280 stop loss, a valid one, as Shahina is recommending for Power Grid. The stock hasn't done much so far this year. It hasn't gone up, but it hasn't fallen much either. So what are the charts indicating here?
So if you look at the power and power PSU, Power Grid comparative has done well. However, in last 5-6 days, we have seen some consolidative move. But the strong part is that corrective move has completed and reversal is seen in the counter. And after the reversal, some consolidation is clearly visible. If market manages to hold 24,000 or starts the next leg of rally, I believe Power Grid has potential to spike towards the new lifetime high territory. So as of now, the support level is clearly visible near 285 zone if someone is looking for positional point of view. If someone is looking for immediate point of view, then I believe 298 will be the support. So those who are talking about positional point of view, 285 can be utilized as a major support for an upside target towards 322 for short-term point of view, and 365, that is the lifetime high for positional point of view. So one can continue to be with this power name for short-term to long-term view with the potential of 10 to 15% upside from current zone.
10 to 15% upside potential to test record high levels of 366 is what Chandan's recommending on Power Grid. Moving on then, Nitish Agrawal is writing to us from Jaipur, and he has around 100 shares of Titagarh Rail, which he purchased at around 1600 rupees, and he is a long-term investor, has a 3-year time horizon, and he wants to know whether he should hold or he should sell. Now, Shahina, Titagarh is one stock that has been bashed from its record high levels. It's a significant correction from the top. For a 3-year time horizon, is this price an okay level to enter and say, okay, let's wait for 3 years? If this person is not making any money right now, but do you think that he will recover his buying price in the next 3 years?
Yeah, I think so. It's better to hold at current levels. This year, as you mentioned, stock has corrected, and this is on back of very disappointing numbers that they showed during the first couple of quarters in this year. And this is largely, initially we had the elections, and the orders were not really flowing in. I believe these issues, and also with the like number of states expanding their metro and rail network, the orders are likely to actually go up from here. They already have over 13,000 crores worth of orders in hand. So basically the problem over here is the execution rather than, having orders. I think these things should be sorted out over the next year. And valuations, are not too expensive. I think these are in this space, these are one of the better, more attractive valuations that Titagarh enjoys. So I would say you continue to hold, and you can, hope for getting your, buy price over the, I would say, very, very long term. I don't think he'll get his buy price, but at least he'll be able to get a better level to exit.
Get a better level to exit. Well, what about you, Chandan? What are the charts indicating here for Titagarh from levels of 1900? The stock is now at 750. What do you do when a chart just shows anything but green?
So if you look at the price behavior, the stock has been making lower top, lower bottom from last couple of months. As you said rightly, it has seen a corrective move from 1900 to 650 marks. The good part is the stock has been consolidating, but the concern is it is not ready to surpass any immediate barrier and holding well below its 50-day exponential moving average. So someone asked about 3-year point of view. So in three-year point of view, risk reward ratio might favor. But on immediate point of view, it would be tough for a stock to hold at higher zone. As of now, I believe that 800, 830 is the multiple resistance area. But at the same time, 700 zone can provide a support. So if someone is already holding, then he has to hold. But if someone is interested to buy new, then wait for further decline below 700 to get a better risk reward opportunity in the counter.
Wait for a better opportunity towards 700 to get a better risk reward for Titagarh if you want to initiate new positions. Now, Roshan Sharma is writing to us from Bengaluru. He has 200 shares of Mahindra and Mahindra that purchased around 2193 and is a long-term investor, and he wants to know whether he should hold on to his positions. Now, Shahina, there has been a lot of chatter about Teslas and the BYDs trying to make their entry into the Indian markets. With concerns around M&M, it's now become the second biggest passenger vehicle company in the country. What is the scope for M&M going forward?
Yeah, the biggest, negative possible in the, I would say medium to longer term is the Tesla launch in India. And with very negligible duties, they will be able to match the EV, price points of M&M and the other EV products in India. So that could be a risk for the long term. Having said that, I would still say hold M&M as of now. You can review it later. Basically, they're doing well both in domestic market as well as in, that is both tractors as well as their PV, their EV. So everything is doing well. Domestic numbers that came out today for auto, there also they have done well in domestic market. They don't have exposure to the US market. They have recently, they are looking to, add to their portfolio, especially increase market share in LCVs by their latest, bid, they are likely to buy out at least a substantial stake in SML. So to that extent, they will increase their market share in LCVs. Numbers will be there next week, which I think should be good numbers, given the fact that they are doing well both on the revenue basis as well as I think margin should be better. So I would say hold now and review a couple of months down the line.
What about you, Chandan? There's a bit of a reversal from the 52-week highs, but the stock seems to be clawing back that lost ground. What are the charts indicating here?
Yeah, it seems that stock is all set to move higher side. However, we have seen a decent run up in last 15 days. After the news of Tesla, the stock fell to 24.25, but we are back to 2900 marks. If I look at the monthly chart, on bigger time frame, the stock is forming a pole and flag pattern, which has bullish implication if someone is looking for bigger picture. So I believe that this bigger picture could really do well if someone is talking about 1 year to 3 years, then stock has potential to really by 50 to 80%. But we are more concerned about the short-term view. And I believe the stock has been making higher tops, higher bottom. Even after the market corrective move, the stock has been holding the higher zone. Immediate supports are shifting to 2800 marks. So with the support of 2800, Mahindra and Mahindra has potential to rally towards 3200 levels. And above 3200, I believe it has potential to even climb to the new lifetime high territory and the commence of the next leg of rally in the counter, in spite of all the challenges from other competitors.
Indeed, we'll keep an eye out on that. Shahina, Chandan, stay on. We'll be back with more queries, but it's time to take a short break. Just before we do that, here's some good news for our viewers. And India's business news leader is not just a click away, and that, of course, is CNBC TV18's all-new app, where you get breaking news, in-depth articles, and financial world updates, all of it at your fingertips. You can download the app from the Apple Store or the Google Play Store, or even scan the QR code that comes up on your screen. Take a short break. Back on the other side with more queries. Welcome back, and Chandan and Shahina are still with us to answer some more viewer queries on your stocks. And Muni Rajulu is writing to us from Telangana, and he's saying that he wants to invest in stocks like Dixon Technologies and PC Jewelers. He wants to know which of these stocks are good for the long term and for the short term, and he also wants to know the entry level for both of these names. Well, Chandan, Dixon Technologies has had a one-way move, right? It's still at 16,000, 16,500 odd levels. Do you see that as a good entry point? What are the right levels for Dixon and even for PC Jewelers, if you have the chart with you?
Yeah, so first to comment on Dixon, in the end of December 2024, stock made high near 19,000 marks. Then a corrective move came till 12,000, and the rally has seen till 16,500. So a tremendous recovery has clearly noticed in last 1 month, which clearly indicates that there is inherent strength in the counter, which clearly suggests that fresh leg of rally cannot be ruled out as per the price pattern. If I look at the entry level, I believe 16,000 or 15,750. So 15,750 to 16,000 zone provides a better bargain buying opportunity for the counter, and upside it can head towards 17,800 to 18,000 marks. So one can stay positive or can utilize any small decline for buying opportunity in the counter. Looking at PC Jewelers, I'll suggest to avoid. We have seen a corrective move in the counter. As of now, we don't see any kind of structure. Low value counter usually underperform the market. So my advice is to avoid.
What about you, Shahina? Stocks are two extremes, right? One being Dixon and the other being PC Jewelers. Do you share similar views as Chandan? What do you see as an attractive entry point for Dixon?
I think it's just too expensive at current levels. And I'm more of a value investor. My whole concept in investing is value investing. So while Dixon is doing very well, they've got, even mobile phones, the new orders that they're getting are likely to see them continue to do very well operationally. I would prefer to wait for corrections, weak market to actually enter into stocks like both Dixon as well as PC Jewelers, which in my view are expensive. And in gold, of course, they are expanding. PC Jewelers is expanding in a big way. At the same time, if I was to buy a stock at current levels in that segment, I would still go with the leader, so Titan. So I think, in my view, if I'm looking for short term, I would look at stocks like ICICI Bank, in those type of investments for the very short term.
As the old adage goes, follow the leader, and Shahina is recommending following the leader here as well with Titan. Now, Samira Banerjee is writing to us from Kolkata, and she has around 25 shares of Tata Motors at 937. Now, she wants to know whether she should hold or sell at current levels. Now, Chandan, from 1180 to 600, still languishing at around 650 is Tata Motors. Does it have the potential to go back to 900 anytime soon?
Yeah, it's very tough to comment on Tata Motors because it has nature of being volatile. If I look at the price behavior of last 40 days, we have seen a rally from 600 to 720. It fell to 535, again headed to 680, now back to 650. So very volatile swings in the counter. It's very tough to trade such name. But if someone is looking for positional point of view, the concern is the stock has been making lower top, lower bottom from last 10 months. It has seen a corrective move from 1180 to 535. So risk reward ratio wise, it favors, but I believe other counter like M&M, Maruti, Ashok Leyland can do better with margin of safety. Tata Motors can see recovery from current zone, but again, the margin of safety and the beta will be high. So if someone is looking the bigger horizon with the view that he or she can do the averaging 2 times, then I believe one can accumulate in between 550 to 600 zone for positional target towards 800. But it will take time, patience, and volatile cues in between.
Time, patience, and volatility. China, what about you? With Tata Motors, there are a lot of concerns with regards to JLR, right? They've already paused shipments for the month of April to the US. Still no clarity as to what they are going to do this month. What's in store for Tata Motors here?
Yeah, it will remain a high beta stock and volatile. So I would say that you should take a book part loss as of now, because while there are positives, being valuations are very attractive. Price to book is just about 2 times. EV by EBITDA is 6 times. But this is based on historical earnings. And as you said, going forward with JLR accounting for 20%, US accounting for 20% of their sales. So the impact of this and what it is going to be on the profitability and how the US market and tariffs are going to evolve, there is a lot of questions, and it is going to have a big impact on the both performance of Tata Motors, as well as the stock performance, as well as the operational performance. So I think better to half of it get out now, book your losses, and remaining you can take your call in terms of adding more at a later stage, because they are going to they are talking of demerger PV into two separate businesses. There are a lot of positives that can happen. Book part loss, and then you take your call as to what you want to add, or again get out of the stock over a couple of months.
The dilemma of choosing between positives and negatives in a stock like Tata Motors. And Shivani Bhatt is now writing to us from Telangana, and she has 50 shares of Canfin Homes at 804 rupees. She wants to know the outlook on the stock and whether she should continue to hold or sell. Chandan, is below her buying price, is currently at 720. But what are the charts indicating here?
So, looking at Canfin Home, first we need to understand that BFSI segment has really done well in last few months, including the heavyweights bench name like Bajaj Finance and all. And Canfin also seen some decent recovery from the lower levels. It met bottom near 555, now hovering above 723 marks. Major trend is positive, but multiple barriers are clearly visible. So if she can give more time, then I believe price towards 800, 830 could be seen. But I think that require more than 3 to 5 months to hold the position to see some more upside. So major immediate structure is positive. Recovery mode could be seen. I think one need to hold for an upside target.
What about you, Shaina? Canfin Homes?
I think it's a very attractive stock for in the segment, in home finance segment, small cap stock. Valuations are pretty attractive. FY26, 1.4 times price to book expected. The numbers were decent, and the management has guided for a 15% increase in their loan disbursals, loan book. So I think to that extent, things should look better. Karnataka market is also improving for them, Andhra, Karnataka market. So I would say it's a good bet. You can, in my view, you see any dips, you can even add.
See any dips you can also add for Canfin Homes. And Rakesh Rai is now writing to us from Chennai. He has 250 shares of Samvardhana Motherson at 163. He's a long-term investor, wants to know whether to hold or sell and invest in some other stock if the call is to sell. Now, Chandan, for Samvardhana Motherson as well, there are a lot of concerns, but what are the charts indicating here? 133 right now. Does this warrant exiting a position and investing in some other stock?
So like now at current juncture, it's very tough to advise to exit the position because in the mid of September 2023, stock used to find hurdle at 103, 105 marks. And then it started the rally at the beginning of the 2024 and headed towards almost 217 marks. So almost 100% move happened from the resistance of 103, 105. Now stock has come to the exact level. If I look at the price behavior, just 15 days back, it made low near 107 and turned high. So I believe that 105, 107 zone provides a better risk reward ratio in the counter to start the next leg of rally. However, it may take some time because selective auto ancillaries are doing well because of the Trump tariff war. Couple of auto ancillaries name were finding pressure. But looking at the price structure, technically, it has turned from a key retracement zone. So that's why the buying opportunity could continue, but declines will be the best buy. I believe any decline towards 125, 120 can be bought for an upside target towards 160, 175. And I think that is the decent run up, but that will take time. Counter is already bottomed out, so one can hold the positions.
All right, Chandan, Shahina, thank you so much for sparing time and joining us today to answer all our viewer queries. But do remember to email us your queries and we'll address them with our experts. That's all in this edition of Your Stocks. For the final 60 minutes, closing bell up next.